I've been in the investing business for 49 years now. Playing defense to me means sticking to what I know, which is to say, I'm not entertaining any investments outside natural resources or conventional financial services because I know those businesses. I have no fear of missing out. I consider that purchasing power loss to be an option premium. I'm also playing the game around net present value, not potential, which is to say I'm not buying plays that will be worth extraordinarily more in high commodity prices, but rather paying attention to companies that are selling at a discount to their net present value at current commodity prices. I still see a lot of value in fossil fuels. That's not a really good way to bring a lot of capital into the business. It is estimated by the International Energy Agency that the oil and gas business worldwide is deferring about $1 billion a day in sustaining capital investments, which means that they are underinvesting $360 billion a year, which means that their ability to produce is going to decline. Paradoxically, what Mr. Biden is doing is making sure that we have to pay high prices for oil and maintain very good margins for oil producers for a long time. The big thinkers would have you believe, Matt, when I say the big thinkers, I'm being sarcastic, that noted energy physicist Greta Thunberg, our president as an example, has suggested that peak oil demand will occur in about 2030. My suspicion is that will occur in 2045 or 2050, and then tail off from that. Let me give you a statistic that I think will support this. The Germans decided in their wisdom to phase out power that worked, which is to say nuclear, in favor of solar in the far north where the sun doesn't shine. The consequence of that is that their power prices are up by 500%, and they still suffer blackouts. The dichotomy between the political positions of the big thinkers and the needs and wants of ordinary human beings around the world suggests to me, Matt, that the oil and gas business is a good place to be. Particularly, perhaps now in the United States, where markets have worked and the price of natural gas has fallen by 60%. Despite the fact that major investments are being made in natural gas transmission and in the fabrication and construction of natural gas liquids plants to export this product to Europe. So I'm still attracted to the oil and gas, but then COVID came and knocked out demand too. The oil prices, you'll recall, fell to sub-zero because at $20 an oil, at $20 a barrel oil, there wasn't going to be supply of oil in 5 years. So the choice at the time was, if you believed that your car wouldn't start in 5 years, you shouldn't own oil stocks. Of course, it didn't. It went to 100 before returning down to 70. Well, certainly the future that we envision, which is to say more demand for all forms of energy, will necessitate enormous inputs of natural resources. Every part of the value chain that isn't intellectual capital is physical capital. It's either grown or mined. Just at the point in time where both demographics and technology point to increased consumption of minerals. The most important electricity metal is copper. Copper gets stuff from the generator to the house, and then it distributes stuff through the house and through the car. But let's return to the subject at hand. The median big copper mine in the world is beginning to look like me, which is to say aged and long of tooth. Bingham Canyon, the biggest copper mine in the United States, 160 years old. Chuquicamata, 120 years old. Ertsberg, 60 years old. Escondida, 45 years old. You don't stand at the top of a pit, throw in water and fertilizer, and have the thing grow more copper. But we haven't invested on a global basis in exploration, in construction, in development, in the copper business for a very, very, very long time. The energy future that you describe is resource intensive. And it isn't all, although importantly, it is technology. There are about 1 billion people on Earth that have no access to electricity at all. Are we going to need more solar? You betcha. Wind? Yep, that too. Coal? Be with us for a very long time. Oil and gas, nuclear, all of the above. Not just for technology, but because we need to continue to do a good job advancing the material lives of the poorest of the poor. Those people want to live like you and I live, and we live a very energy-dense life, and we want to live better. So yeah, I need to say that 50 years investing in natural resources has made me sort of a connoisseur of political risk. And I've experienced some of it too. I was a fairly good-sized investor in Russia, which treated me well for 20 years and then treated me very poorly all of a sudden. This next country may be too small to play. Guyana, with less than 1 million people, now has 7 billion recoverable barrels of oil.
Wow.
The state take in that will be over 50%, approaching 60%, if you assume a $20 margin. Over 20 years on 7 billion barrels of oil, you understand something about the social rents that will flow to a small country like Guyana. Politicians seem to have a facility for wasting vast amounts of money, but that opportunity seems almost, probably not a word, unblowable. I think it'll probably have a happy outcome for them. But the African middle class is the most rapidly growing middle class in the world.
Yeah.
Many African economies are growing at 6 or 7% compounded. Let's just be honest about it. Is the incredible inventory of human resources in Africa, the incredible technologists, the incredible entrepreneurs, all the way down to the market ladies who I wish were running those countries, to the geologists, to the engineers. So you'll continue to have those political dislocations. That's in Africa. You have to go to places where the competition is afraid to enter. I need to say, in terms of cash in, cash out, the best country in my memory has been Chile, but the second best country in my memory has been Congo. That isn't to say that I haven't taken substantial risks. I invested there in 95 and 96. In the midst of a civil war that killed 2 million people. But in the end, the rewards much more than justified the risks. Yeah, it's a fairly small space, but I'm really attracted to the technology around vanadium. And the investment case for vanadium has usually been made in the context of vanadium alloys that generate high technology uses for steel. Things like jet engines, jet skins, and stuff like that. The fact that it's up 400% makes it so much less attractive to me. The price of lithium doesn't need to go up. Everybody and their brother is scrambling to find lithium. Meanwhile, there isn't a shortage of lithium. There's a shortage of lithium processing capacity. You need to get the material into a chemical state where it can be used in a battery. And my belief is that we're 5 years away from having more than sufficient processing capacity in lithium, not understanding that increase in price has obviated most of the benefit of understanding the narrative. The increasing use of graphite in all kinds of applications has me interested. You have to have enough of a knowledge of large flake and small flake graphite, as an example, the supply of each and the demand for each. So I'm just now beginning to learn who the experts are and who the experts aren't.